It's kind of predictable after a number as bad as what we saw today here in the U.S. But it's not just us. This is a global story. The slowdown in manufacturing has been something to note here just over the last 24 hours. It started here yesterday, continued in China last night, and then in the U.K. this morning. Yu-Dee Chang is the chief trader at Ace Investments. He's with us from D.C. So if it weren't for the U.S. jobs figures, we'd be talking, I think, a lot more about this. And it all is one larger story about a global slowdown. What do you make of it?
Absolutely. That is the story here, Conrad. Global slowdown. We're talking about China. Looking at the numbers, you were talking about the Chinese PMI number. The official number came out to be 50.4. Barely expanding, but the unofficial number, which is more reliable number from HSBC, is actually 48.4. China is contracting. They're having its slowest growth. But you know what, Connor? Forget about these numbers. Talking about something that is real for me, right? I talk to the people over there. I have a friend who actually works for a Taiwanese consulting firm in China that does exit strategies for Taiwanese firms. How many are there? It's about 110,000 Taiwanese firms doing business in China. Okay? So he tells me, usually for the past 3 years, we get about 2 companies per month coming to us, asking us for advice on exiting strategies. For the past 3 months, on the average, they've been getting 20 companies coming to them per month, exactly, wanting to exit. Now, some of them not necessarily having non-profitable businesses, but they see the top, they want to get out, they want to sell their businesses, their land, their equipment. Scary.
It is scary because you think about it, we know Europe's a mess. Everybody acknowledges that. We don't know exactly what the end game is, but we say here in the United States, at least we're not Europe, and at least we have China not crashing or not having a hard landing, and maybe they'll just be able to skate by and still have strong growth, but just slow down a little bit. And you're telling us, no. The risk here is of a hard landing. Is that right?
Yeah, that is absolutely true. I think most people right now, this second, still agrees that, well, looks like there will not be a hard landing, but the potential now is very real and it's there. And it's like you said, it's a global story, not just China. If you look at the BRIC nations, oh my God, Russia, they're jokingly talking about taking Russia out of the so-called BRIC, right? India is slowing down, Brazil is slowing down. Of course, China's story is slowing down. China's supposed to be the growth engine of the world here, and if that is slowing down, it's going to be scary.
Give me a reason then. We're down on, I know today is one thing. We have 10-year treasuries at below 1.5%. We have the Dow down 200. The market is certainly a big story today. But give me a big picture reason then, with all of this going on, that I should invest in anything. And if so, what is it?
Well, it's still possible. Connor, don't forget about, I think there's still the concept of risk trade. Exactly for what you said. 10-year, 1.5%, 30-year, 2.6%, right? Yeah. And with the so-called Bernanke put possibly in the market, when the market does stabilize, people are looking for yield. People are looking for a way to make some money on their money. So eventually still getting forced back into the market up on stabilization. So buying the lows, still not a bad idea. It's just that you probably have to wait.
Now, you're buying in now, or at least kind of trying to get in on the stock market as it sells off.
Absolutely so. Not necessarily the second, but dollar cost averaging in. Yes.
Yu-Dee, thanks. It's good to see you, by the way, and hopefully we'll have you on again soon, talk about China and everything else.
Great.
Yu-Dee Chang out of Washington.